All right, so this class we're gonna really quickly go over your guys' homework, and I gave you guys a top-down analysis following a couple of triggers, Elf, Netflix, Jamia. Wanted to see what you guys could come up with, and this will obviously kind of finish up that top-down analysis, and then we'll kind of go into the confluences, gap up, down, and gap down targets, or rules rather. But let's go ahead and start. Loss, you did your homework, it looks like. And did his homework quickly. So weekly time frame. Uh I think that it's important that you mark this range out, right? And I do see your points of contact there, so that box looks good, but try to include that as well. It seems like this candle sat right on top of it. But other than that, great. Let's see. That would be correct, right? Punch down, punch up. It's not really any other boxes. There's a good range right there. 50% of empty space. Love it. Channel looks good. Okay. Good job. I'm going to be quick with these. If I see anything wrong, I'll point it out. Uh, yes, hourly does look good. I would explore obviously the notion of whether that 15-minute candle close is the same, because if it is, then you could take a candle close inside of that wick possibly. So, but otherwise, good charting. All right, King. Let's see here. This one was a little tougher, obviously. Where's your weekly? 24. Oh, damn. So we wanted you did all three. I think who said he'll be right back? Technical strategy. No, yes. If series you gave were confused as hell, yeah. If that no, I said if you guys wanted to do a different one, it was totally fine. Choose whichever ones. But real quick, if yeah, King, one of those stocks 20 weekly 24 and or top down analysis on that one. So you gave me three charts. I would probably argue, okay, so you got the 24-hour floor there. I think you I don't know, I kind of want to argue that that's the floor now, right? That's the range. um I think I would actually, with these two stronger points of contact there. You see, you bounce and then pull back and then pop up. You don't have like, you establish, I think, the floor there. So I would just pull that box down. But other than that, yeah, that's the money right there. So you got the general idea. I don't blame you for putting it there because on the weekly it is that same level. But and then Jamia. Now those are equal wicks, right? The top looks good, perfect. There's a small range right here, right? That could be marked out. I like that first TP though, if you were to take it outside of the box. Second TP, yeah, good target. So your targets look great. That's wow, that's, he said to the moon. He said 813 for a call, 880. I don't think they have an 881 strike, but probably $9 strike would be the right one. I would bring that down though to the wicks. Yep, first TP. I usually like the wick, right? Candle, and then I'll wick, and then I'll have like two small trims in this area. But I mean, otherwise, the target, the upside down. That's funny. I like that. So not bad. Not bad. All right, Maya, try to go too in depth. That's good. That's good. That's good. That's all very good, Spartan. Perfect. Yeah, we could call it that, but definitely range. Range. That was a box. If it's a box, you got to give it that top, I think, right here. Possibly. Well, Nah, you know what? I take that back. That's just going to serve as like a small range to break because it clearly is. Yeah, that looks good. That was definitely a box. Okay, good. Range start. Yep, that's good. Yep, range. I like the top right there, but other than that, looks good. Yeah, bring that down to the top right here. But otherwise, this looks good. All right. So I would argue that that right there is its own box, right? You see the floor right there, and you see how it wicks off the 50% mark. That's typically a hint that that's a box and this is a range. So maybe that would be the only correction. The floor, however, would still be very important and the first target. So the content, I mean, it's interesting because your cost basis would be this floor, and if you recovered this much, one could probably assume you're moving in that direction. But that would be, the trigger. Oh wow, okay. Let's see here. I like the detail though. Okay, so that's good. That is also good. That could be defined, right, as its own structure as well. Not bad. It's a difficult chart. Also, mark that or mark this range out here with the box because that's what you're sitting on. But I mean, it looks good. 84 hours. Okay. 1 hour close below 93. I think, yeah, you need to have that imbalance. Basically, that wick right there, it would be that target. So not bad though. Yeah, it definitely looks good. I definitely like it down too. It's been holding that level for a little while. Christian, if you want to, well, redo it, I'll look at it again tomorrow or something. All right, let's speed this up. Buster. Your your little squatty candles are funny. Jamie, so same thing, I think it's the wicks. However, the candle closing in the wicks does give it a, oh yeah, and you got a wick off of that floor. Yeah, tomato. I mean, it still looks good. Yeah, so I mean, I think that looks good. Mark these structures out because again, they're that would be a target, kind of how he did his. Um, but I don't. Okay, hold on. Before I move to your next one, that right there, look, floor, ceiling, ceiling. So bring that down. All right. Interesting candles there. I see. You did the same thing. That's good identification of the range, Buster. That's perfect right there. That's a good floor, great top, empty space. So that's fire. You'd be able to catch a great play off of that. That's good. I would bring that up if you're going to mark that the old box right there at the top there. Um, you can see the candle close is actually same place, but other than that, I mean, I don't really see anything that you have down below in here other than maybe this old range. This looks good, however, for a place to touch down. And that looks good down there at the bottom. Yeah, a little bit more definition. Russ. I like the weekly simple chart there. First green candle to your left is here. I like to mark out the targets to the upside again, just in case. I would actually right there. Is that, did you measure that out? Let's measure this out so that way we know we got it right. So this is what I meant by that box, right? Kind of want to sit it in there like that because it's important to see right where price can't get back up above. And you're hooking, I mean, it's still fluid. And again, you go to lower time frame and there's a lot more stuff like that, right? Those are ranges that are probably going to matter, right? When you get down into these lower time frames. Yeah, for sure. So these actually can be treated basically as targets. Structure is around it, and if you move to the lower time frame, you'll see that, right? How it kind of interacts with that. And so really right now you have more of a bearish, yeah, hint to you. And it's kind of interesting because right there, dead slap center, the two of them, that's that range. So it'd be like, first break would be, yeah, 93.21. I mean, some sellers right now could actually set their stop losses with longer expirations here, or if they have tolerance and want to average up at 96.65 and then look for that, obvious leg down. Anything past that would be no bueno. So this is kind of how I mark out that hourly box. Again, this is a range right here. There you go. All right, let's see. Oh, I didn't even measure out the empty space. That's what I meant to do. So the tough thing about this is that, the structure once you get down here is a little rougher. So it's kind of hard to measure something like this out, right? Because what's totally empty is like more in here. This is where almost these candles sitting side by side create structure. That, and I should elaborate on this because this isn't definitively, it's not empty space, right? Because any empty space that you, and this is important, so everybody kind of lock in here. This right here is not, okay? Because if empty space is created in these empty candles, these wicks kind of eliminate, your price opens up at the 50% mark, right? And shoots up, fills up all that. This wicks down to the floor here and then pushes out. So it's actually something that fills the empty space along the way. And it's the same thing to the downside, right? If you were to see something, even kind of looking like that, or it's not a great, I don't have a perfect example right now, but like that, actually, that's perfect. Like that's not empty space. Like price obviously blows through it, but for other reasons. And it had, yeah, earnings. So it blew through that target. So just so everybody is clear, right? There is a very, like, this is not totally empty with the red candle sitting in front of it. This, that's the only pocket of empty space that you likely have. And so it's, good to identify, where exactly, or, you know, even this actually, I don't know why I missed that, but that's not super clear. And you could actually look at this and say, in between this pocket of fast falling and this pocket, that's 50% of it, right? So you clearly have structure in there, And not every stock, like Netflix clearly has empty space in here, like nice pockets, and that's what the lower time frame is meant for, is to be able to identify those. So, all right, let's keep this going. Other charts were not lowing attached below. Okay. So this is your weekly. That looks good. Yeah, I like that. Nice channel. You know, maybe a floor would do somewhere around here. Looks like that wick and that wick maybe might be aligned, but other than that, looks good. Looks good. Simple. That's what we want. That looks great. Those two wicks are coming right off of the same mark, so maybe consider dropping that down. I like the floor up above you. That's clear. I like simple charts where you're able to identify exactly what you're looking to accomplish. Okay, so you have your levels coming over from the left. You do see the empty space up above you, right? Psychological level. Um, so it looks good. See what you're fighting for. That's also looking good. All right, not bad. I like the charts are clean. Oops. Okay, I like how you're able to. That that is a box right there, or was a box rather. So I guess that's good that you don't have it marked out the same way. But yes, that floor would be over. Yep, you're getting shoved down underneath that, so a candle close outside of it would likely. Yeah, this is good. I like this. These are good charts. High stakes. And then that last one that you sent. Okay, so the greater detail. I mean, yeah, even just a candle closing in these wicks, dude, would be phenomenal. Uh, range looks good. I like that. Yes, there is the second target, but that would also be a target as well. This looks good. So Apple saw previous day, losing whatever I fell immediately. It gapped up above, it immediately filled this gap below, bounced hard off the retesting. A few scalp plays possible, but I annotated larger potential moves. This is beautiful. It's a really navigatable chart. You could probably draw a structure around this and look at that empty space above too for any sort of continuation play. All right, fast market. So I think here, I mean, you really, I guess you do get. It's interesting because your candle close is here. You dip down into the wicks and then pull yourself back up. Tap that high, gap up, and flush. I don't know why you gapped up, but you did. Tap this. So I mean, it looks good. Yeah, I like this. It's a big ass, big old box, but yeah, that looks good. Um, okay, so this is where it gets hard to see exactly what you're pointing out here. I see the structure up there. I like the wick and the body candle closed, so I would bring that up. That was a box or a range. Yeah, range. All right, let's see how your lower time frame looks. Okay, so it seems like this might be a pretty, and it might just be how you're uploading it. But this might be a harder chart to navigate because again, you right here, right? I see structure there. I see structure that you punch through, popped up and punched down through here. This box, kind of is old news. Not old news, but the floor is equal to the empty space underneath you. That gap down, gap down target is obviously kind of like 50% right there. Um, but that being said, you need to have your most recent price action. Like map this out based on what has just happened as well. Looking at the 24-hour, that's where you're finding what happened out around you. And that's where you kind of identify your play. So that, again, that could be a box right there. That's excellent, right? Marking out that empty space. Um, Okay. Yeah, and that is the floor down below you as well. Kind of that wick and then that body right there. Yeah, looks good. This looks good. Let's see how your lower time frame looks. Good box. First green candle to your left. That would be over here, right? And technically that $80 candle would be your first green candle to your left, right? Now, the floor is very clearly right here. Wick, wick, body, and in a range. All right, not bad though. As a group, collectively, I can see everybody is getting traction here. All right, now, yep, old box. Yep. Again, you want to mark out the most recent structure, kind of like how he had marked out. It is good that you have that top. So, I mean, that is the trigger into that empty space. That looks good. Obviously, that looks good. First green candle to your left, yes. And remember, points of contact also matter as well when picking or trimming or selecting targets. First green candle is typically what gets hit. Like, that's the last. So, that's the last trim. Okay, so when you look at it this way, right, that's cost basis. That was a box popped out, punched down through itself. So you could mark that out as its box. You can get rid of whatever's coming over to your left. That looks great. Absolutely perfect. This obviously gets a little bit loosey goosey and is not as clear. I typically try to go for where candles held. I would even argue maybe there, or even just give it the whole range because price opens up underneath it, wicks, and then drops. So not bad. All right, now I want to go ahead and shimmy into a couple of finish these slides here, and a couple things that we didn't go over, and I want to go ahead and talk about confluences. We'll go over some more in a second. Now, I want to again just confluences are used with discretion, right? They can be used to identify the worst case scenario target to the downside, or for hedging or potential targets to whatever place that you're taking it. These are used in tandem with boxes, right? And thankfully most of the time, well, all the time that confluences happen for me, it comes from structure and typically parallel channels, right? Some people have confluences in data or indicators or EMAs, all that other stuff. But for me, my confluences are focused around basically parallel channels and structure, boxes, key levels, all that good stuff. And this is again where two sets of data collide. All right, confluences provide the same buy and sell signal, or excuse me, providing the same buy and sell signal. This can apply to trend, the Potter boxes, or even indicators or key levels. These are especially helpful in trend, as we know that in order for that control to break, a mechanical trigger must fire. Confluences should appear naturally, not through confirmation bias. So we're not forcing them; they literally pop up when you start to chart. And even when you're looking at like places where price can get trapped and build, and as they build and gain tension, this is kind of what we're doing a little bit on SMCI. It's not the cleanest chart, but it does, again, that's where I'll start hunting for confluences uh, based on, different channels colliding. And we'll take a look at that in just a second. So again, confluences help us in picking our targets, right? And this can be used above and below for worst case scenario, or, the play trade to the upside, trade to the downside. In the example, we can see AMD is in trend, right? We can see that at the top of the box below, or trend cross. Uh, and that's, again, yeah, that's going to be this mark here, right? right? Basically 50% of this range or old box. Now, with that being said, the same thing is obviously true to the downside, where we see the candle closes right near the bottom of this channel. Let's see here. So we know that structure and imbalance is broken will send you to your next area of support. This in itself is playable. So if you are also in confluence with trend, this should strengthen your conviction in a higher probability target. So what I'm saying here is that, price fell underneath this box or has secured itself underneath a level. You already see empty space available to fill. And then when you place your channel and it lines up perfectly, that's typically how that works, right? Because we're starting with structure first. We're starting typically with horizontal levels first. On the higher time frames, on the weekly, that may be the exception. We're using those confluential targets as we move down. And just to kind of, and I'm not, this isn't perfect, but with SMCI, right? Something that has gained this much tension, and in a way, the way that I see this is it's pricing in a certain target that may be pretty far away, right? We took a little speculative position here, but it's where we apply both, right? We're looking at, okay, well, do we have any trend that's being built here, and what are where our first green candle to our left. Again, I started with trend, but this is where we would just identify the play as such. We're looking for a break over 35.77. We have a floor here, right? We have empty space basically through here. There's a little bit of traction or bouncing that happens at that $40 level, but it is going to be right up around that 49, 48 level. That would be the ultimate target for a move like this. And this actually is not, I'm not actually giving you guys like a made up analysis here. This is actually real usable analysis. Because look, pull it over, SMCI, SMCI. This is where it stops right around that area. Obviously rips past it. This is also where it comes to die, right? It gets stuck. So I think it's actually a real concept. I took some really, really cheap, and again, I'm not calling this as a play here, but I did take some really cheap, out of the money contracts for that reason. Now, again, there that is a downtrend that I just drew as well, and I believe earlier, this is typically how this works, right? I also had this trend applied here, and I double checked, make sure that I was encapsulating, things like that usually give it away. And I don't have a real clean top, right? So usually I'll go for like something like this. If I have to cut through something, this seems just a little bit off. It is where the wide mouth, I guess, if you will. I'll talk about the contract. So does that point, what does that point give away? What point? When I see control, like they're trying to pull, that's what channels are, right? Channels are trying to establish control. And so when I see something like this, right, where you pop up, and it's horizontal too, but you pull it down and it even retest it, that right there will a lot of the times be a giveaway. Um, a lot of the times, if I really can't figure out what I'm looking for, I'll move into again, a lower time frame. I think this, giving it the wick, does add a little bit more confluence to the middle. So, if you want to leave it that way. So we have this uptrend, right? And again, we do have this kind of really, and I haven't drawn one that way, but we have this wide fluctuation in price here, right? And this kind of applies to that downtrend. So you're kind of at the bottom of this channel. And then if you even zoom in, right, and this is where things get real juicy, also really, really compressed this way, right? And these are bilateral setups. So these are setups that can shoot down, pop back up, right? Punch through their own boxes, or they can just straight the hell fly up, right? I was wondering if we can ignore earnings, pops, and dips, or we should use them. Um, they the points in which they hit are relevant, right? They're not going to just be getting hit by they're not going to hit anything. So say SMCI chops till earnings right to the end of this very box, which would be nuts. But if it did, um, and it popped up and it hit this mark and pulled itself back down, right? So just use your imagination here. So price, goes to earnings, pops up, and then still closing green, but closes back down, maybe like right here at 35. If you have that big wick in front of you and you still have an area where you can see that price is, that's resistance, if you pop back up or bounce off of that, it's still something that can be traded through, and it's not much resistance. There's a lot of unfilled orders there. The goal would still be to achieve that floor, just for an example's sake. But so anyway, and then as far as the targets are, again, I'm not just gonna give. I grabbed $45 calls for April 17th, and I may end up buying a little bit further out just in case this does start moving into earnings. Now the contracts were pretty cheap, around $17. So $17 all the way out till April. Again, that's going out on the far end. There's still, and tomorrow I might look into the $40 strikes. But then I got $24, also got $24 puts to the downside. Those were a little bit more at $28, but this is the floor right here at 26. So I figured, 26, 25. If we saw a really fast dip, which is what I would assume would happen. And if it does, just for future reference, if this dumps, whatever direction it goes in first, it has to grab onto something. And this being a flat floor, I would look at SMCI punching through itself like that. Anyway, let's get back to the boxes. I'll get too far ahead of myself. While lower time frame and day-to-day analysis is needed for swing traders, confluences can make for take profit targets or even contract selections. Every time frame and channel usually will present this opportunity. Targets can be tops, bottoms, or cost basis of any box. Again, prioritizing empty space. Oh, are you talking about high stakes? If you're talking about for charting, like channels, yeah, try not to leave them out, but if the structure says to do it, then do it. When looking for a target to the upside, it's the first green candle to the left, or if we're going to, it would be structure, and then usually that last green candle. Not usually, almost every single time, it's going to be that very last wick. I'll take you guys back to a trade that this was actually a record breaking trade for a couple of people in the Discord. Um, 40,000%, 40,000% trade on ANF. And this is, again, not even necessarily the punchback, right, that we're used to. This was just a base trade, right? I was watching ANF, and anytime I see empty space, and ANF has got a knack for taking care of business. But this was the target, right? And very clean structural box, absolutely perfect. You can screenshot this. I'm actually going to get to that, Neil. So trade outside of there took 4 days to get there. Weekly contracts got super cheap. It literally gapped up. The candle on the floor, first green candle to my left, wicks up, hits cost basis. His contracts are at, basically 40,000%, and then proceeds to freaking die for the next week. But it was pretty awesome actually to see this, or not even just see it play out, but to play it up. And the structurality, I guess, if you will, of this box is ugh, I love it. All right, now see here. All right, a few more things. All right. For shorter expiration dates or short swings, we know that certain levels will bounce. These are 24-hour floors. These are the tops of boxes, right? They're just gonna bounce. Kind of like this demon right here did, right? Here. We just know they're going to respond, right? Even if it's after hours, it's going to respond. And it did. Filled up its empty space, tapped these wicks, and kind of looks like it wants to come down tomorrow, but we'll see. So we know that certain levels will bounce at a confluence, and it's almost promised, right? Have you ever used average range? No, man. Manny uses it, but I haven't. No, I know what it is, and I know how it works, but I haven't seen the. Yeah, I haven't looked at it in years, man. Um, I think the one thing that Manny and me agree on is that a lot of the things that I wait for line up with his ATR. You know, the empty space, you know, waiting for things to consolidate to let, and then those, indicators are the ATR relaxes. So, I mean, yeah, again, I haven't really incorporated it into my system. But anyway, on this one, right, at a confluence, and it's nearly promised. That being said, right, nothing's promised, but this is where tap, tap, and then the median of this channel is what ends up getting hit. So this can provide us with exit areas, bounce trades, or rejection trades. These confluences can be really useful when things, and the cleaner your chart is, the cleaner the empty space is, you're going to see the cleaner these confluences are. The messier chart is, right? What is the one that people are having me look at right now? Hood. Oh my God. And not to say that Hood doesn't have, I mean, the consolidation, the price action right now is nutty. But this is one of those setups where uh, trying to find something like that, right, is, and like I said, there's definitely opportunity here. And there's that, first structure, green candle to your left. Anything outside of here is, fair game, and the same thing to the downside, right? Where we have a floor underneath us at 70, 80. But trying to, find or incorporate a lower time frame range in this area, it's like I'm putting too much work, and again, lower time frame area here specifically. Um, but if it's too shrouded and there's too much going on, I'm not going to go apply that. I'm going to wait for those higher time frames ranges to break. Period. End of story. All right. So this concept can keep us from taking trades due to risk to rewards. So using the example posted, we wouldn't want to take a full size position or a position at all if we wanted to take a firm down to support. If we would know we are nearing a major bounce level, then this must be considered before taking a trade. And obviously, if you didn't take it here, this is where people are going to be taking profit, and we know that price is going to respond. So we wait for that next pocket of empty space to get filled. So yeah, exactly, Wayland. All right. So, picking targets, taking the trade. Once you've found confluences on the chart, you have to identify how that price target will get hit, right? What's the story? What's in between you and that target on whether it's the lower time frame, charts and entries. So that's it, right? Confluences don't need to be overcomplicated. They just need to be there. And if they're not, then they're not. And it's just that simple. We don't force these things. They typically pop up with good charting. Now, this is some good stuff right here. So get your notebooks out. All right. So gapping up and gapping down. This is one of the bigger signals in the market. And I have some rules for it. So gapping up and gapping down above or below levels sellers or buyers control gives us key indications on future movement. This is why being inside of range, right? Gapping does guarantee that price is going to oscillate. and that could be good for some. But if it's in range or it's stuck somewhere, I want it out. I want the price out of that range. By gapping up over a sell wall, pushing sellers out is squeeze setup. Typically, a 3% gap is the rule. So Manny has a rule where it's just 3%. Again, we tomato, but I have a rule where it has to gap up above something. You have to have grabbed onto a floor. You have to be outside of a box. And this can actually be, so real quick, everybody has this if you have TradingView. You go over here. Hold on. Sometimes they mess it up. Yeah. Look, I have it set up here, but you should be able to like create a new list. Yeah, gap gainers, right? And this is for people who day trade, right? And you can kind of separate it by market. Oh, there's a great example. Damn, if that's not the most perfect example ever. Candle closed nearest to you, right? You gap up and you push out. Now you don't clear the wick, but still. Anyway, gapping up, right? Damn, fire. Gap up, hit the top. I don't know what the hell that is. You gapped up above something important. Not a range. I'm going to find out though. That, whatever that is right there, that sellers didn't want that bad or want so bad. Three nasty wicks for driving price down. Price opens up on top of it, fires up. Anyway, that gap up and gap down rule is typically good for finding trades that are putting sellers in a bad place. What the hell happened here? Now, a lot of these are going to be hot dog water. Like these. But as a rule of thumb, how did you get that? How do you get this watch list? Uh, I know this is the juicy stuff right here. So there is a, I believe you can, what is it? Create new lists? No, sorry. It used to be different. It was already here. And then you just kind of, there it is. So watch lists, hot lists. And then you can kind of go here. You can do the NASDAQ, NYSE, ARCA, and then you can do percentage range gainers, right? Gap gainers, percent gainers, volume gainers. And this is, again, not always the greatest, but it does allow you to see where volume is potentially heading or what has received a large influx of volume. Now, some people misuse this as something that they can just suck on like a binky. But unfortunately, a lot of these stocks are just low cap stocks that get big cap money for like 2 seconds and then they die off. But nonetheless, it is a useful tool, especially if your watch list stock is on this list. A lot of the times right now you see kind of the smaller stocks in here, but a lot of the times you'll see like a bunch of big cap stocks. Pretty cool. All right, now let's get back to it. So gapping up over a sell while pushing sellers out is a squeeze setup. This is good stuff. And a lot of the times, yes, you can line up a bounce trade. So I think it was on Sundial. Shit, this, I don't even think it would have given you a bounce trade. It was just go up and go. Yeah, it did. Gave you a pre-market high bounce. Oh, disgusting. 3-minute time frame right there. Bam. Now, I think this was all-time highs, so couldn't help you on that one. But, oh, never mind. It was not all-time highs. Damn near the whole wick. So, anyway, by gapping down under buyers or under a sell wall drives you into your next support. Now, if you gap down to the floor after a big leg down, that's going to set you up for an immediate bounce. But daily gaps over key levels, right, equal bigger moves. Because bigger gaps, right, bigger moves outside of range. And listen, intraday volume is not that strong, right? Most of the volume that gets put in there is to control. A lot of the bigger moves happen overnight, and then they set things up for those, bigger moves later on, or over, or at the bell, and then they fizzle out. But that range, or those ranges that are established, it is tough for intraday volume to break it. And so these big gap up and gap outs displace, right? So many different sellers and buyers on, depending on where you've gone. And this allows for fluid trading to whatever next target is above or below you. 1 hour, 15-minute gaps in range are playable, but cap your range, right? So again, inside of a range, if you gap up and you can see this gap on a lower time frame, but it doesn't really look like it anywhere else, higher time frame, then that obviously caps where you can go, which is why I don't really do it. So, all right. 1 hour time frame. Again, the gap down under buyer support. And again, I am referencing now basically range trades, right? But this is for day traders, swing traders, all traders, right? So lower time frame gapping, right? Where you can, this is where you do the deeper work, or if you're watching, say, shit, I mean, even Tesla today, looking at that gap down and what was your range previously is where you can start to see what's been recovered, right? And where price can potentially go. So I believe it was that wick. Yeah, price was able to gap up an open cost basis. That's right. And that's actually one of the reasons that you saw such an explosive move shortly after the bell. You wick down, touch the top of the box, pop, pop, nearly go and graze this target before fizzling, falling, getting stuck back underneath the top of the box and falling. But this is actually a perfect example, right? In the morning, if you see that your stock has, again, on the 24-hour, not much to really go off of, right, folks? There's not really anything here. And so for those of you who are scalping and day trading and whatever, this is going to be really useful for you, because this is where you can start lining up basically what's likely to happen, or at least what that bell trade is going to look like. Price opens up on cost basis. Before the bell, it actually opens and is opening outside of the top of that box, which again, think about how many sellers are being displaced by this. How many have to exit their positions that they took at the end of the day? 389 to 394 ain't no joke. So this allows for price to wick down, pop up. So gapping down to support or just above it can lead to fake outs, right? Just as they stop, they will drop to that support, bounce for the gap fill. So this is where price will literally gap down. And I believe that we saw this on the Qs recently. Yeah, and all these stupid little gap downs that we saw. Yeah, like price right here gaps down, right? But it doesn't actually lose anything. And I think on the 24-hour, yeah, we hadn't actually lost anything. And so we see that gap down, but yeah, right there. So price gaps down to the floor, wicks down, teases the shit out of those sellers, and then extradites them. Gapping up to resistance puts sellers in control at the bell, therefore allowing them to push it down to whatever support is nearest. And this means gapping up to the bottom of something, right? So if I don't have actually, this is a great example right here. Price closes here, price gaps up to the top, immediately opens at the bell, you get a small wick, and price drives down. And this would be the same thing if you're, let's see, if you're gapping up, right, to say, I'm looking for it now, but if you gap up to a floor of a box, you're going to have to pull back and retest something. Now, I think I mentioned this before, just because you gap, if you gap up above this, of course, you're going to go, right? You're going to rip. Um, but if let's say price gapped up here to this overhead, just gap the hell up. The first move is down. What, just now? No way. That's going to extradite some people. Wow. Yeah, I swear to God, I didn't look at NQ before I called that. Or said, not called that, but said that. That's funny. Just real quick, just checking this. Hmm. That's going to be interesting. All right. So I would target this gap up is not on a floor. It actually, this gap up was literally to a floor. This is resistance. So the first initial move that you get out of this is actually a rejection. Hold on. Not to mention, to gap up two costs, but god damn it, dude. I really do love teaching because when you're not full of shit, things typically work out, right? Price is holding the floor of this structure over here. So you could make a definitive statement right now on this lower time frame. Let's see. All right, there's enough points of contact there for me to say the wick is obviously going to be some sense of structure here, but it does look like the candle closes are down here at 24.8. So this is actually a perfect example. I get to show you live. You gap up two cost bases, also simultaneously a 24-hour floor, and now you are pulling back. And that's because you need to find some buyers. Now you may be able to find them here, but if you lose that, you're going to look. And I can do this all day on the 5 minute, right? Because this is good practice, actually, for those of you guys watching. Right, that would be one of the first levels you'd be looking at if you do keep falling. A retest off of that. Let's see. Do you have any wicks touching? That's exactly what you're on right now. So yeah, that being said, you could say, well, underneath, right? If we lose this, what is that, 24K or 24,845, we'd be looking down at cost basis 24. But the move, it doesn't mean you get follow through unless it's going into empty space. Period. Now, to me, this could actually be interpreted. This could be interpreted. This could be interpreted as possibly bearish, right? In some sense, right? It could be interpreted as something that's bearish. And the only reason I say that is because you haven't really. It could help, right? But it's going to actually be um, a little bit more significant. So from here, you would need to rocket, and I mean rocket your way up and out. And you got a lot of overhead structure. And because you're now leaving gaps behind, if this fails, this can just sink down and wash. Pretty cool. So let's see what happens here while we finish this up. I'm going to leave this here because this is that lower time frame box that you're sitting on. These are the wicks that try and grab it. There we go. And then that overhead. All right. Now, back to what we were talking about. So here's another example, right? And this is actually gapping up above cost basis. And this can be utilized on any time frame. So not every time do we need to gap outside of the range, but even just gapping up, say you gapped up above a box, right? Or above a range, and you're able to push off of that cost basis. This makes for a pretty useful area to make a pre-market plan, right? You can establish what needs to be broken up ahead of you and know that you are above and you have displaced. And I have a lot of faith in these trades because when you've gapped up and you've displaced a lot of sellers, that means that sellers or buyers are going to be trying to get out of their positions. And this a lot of the times means forceful movement in the opposite direction. Now, here's another example, and this is actually, we have structure here. I should have brought that up a little bit, but we have structure here. We actually gap up and out towards a small resistance in that range, and price immediately pulls back. Now, again, you're only really promised the top here, but because you fall underneath that box and end up driving through the whole thing, 50% mark. Gap down to support, this is pretty simple, right? If you gap down, price is typically going to gravitate towards, and a lot of the times price may not have even hit it in pre-market, but if it's getting very close to it, if you've gapped down to something, then you're looking for that price to, that's actually where a lot of really awesome bounce trades can come from, for those of you guys who bounce things. Now, here's another example. This is actually, again, a area that sellers control, right? That has already been punched down. Price opens up underneath that collar, and I call it that sometimes but it's not a technical term. But that, uh, top of the box area, price gaps down underneath it. And again, sellers are in control. So you can just look at it as who is in control at the bell. Are you at a floor? Are you under a floor? Are you outside of a box to the upside? What do you have above you? And this is where you go through your checklist. Recently, Chad bounced on you. Oh my God. Yes, I remember Chad bounced you. Very good. All right. So just to recap that for you guys. So gapping up and gapping down above, below sellers levels and sellers or buyers control give us key indications on future movement. By gapping up over a sell wall, pushing sellers out, it is a squeeze setup. Typically over 3% is the rule for continuation a lot of the times. By gapping down under buyers or under a sell wall, this drives you into your next support. Daily gaps over key levels equal bigger moves. 1 hour to 15-hour gaps in range are playable, but cap your range or cap your the potential trades that you could take. 1 hour time frames. This is where we set up our day trades. The gap down under the buyer or the gap down under the buyer support has you move down to the next one. This is right here underneath the floor. Gapping down to support or just above it can lead to fake outs as they will stop as the stop will drop to that support or bounce. For the gap fill. Gapping up to resistance puts sellers in control at the bell, therefore allowing them to push it down to whatever support is nearest. All right. So gapping up to something under a floor, that's a rejection, right? Gapping up above cost basis, that's continuation. Gapping outside of a box, that's continuation. And again, your job at that point is to find the targets below or above. All right. Now, we haven't really fully established the punchback, so we're going to talk about this. And some of these examples, I have uh, lower time frame punchbacks marked out on higher time frames, so you'll just have to forgive me on that. But so this is obviously one of the pinnacles, or rather the highlight of something that I found through volume profile, through observing the 50% mark and how price reacted to it. And it's been one of those things that I'm glad I didn't have the noise of indicators. I'm glad I didn't have the noise of somebody telling me what to see, because at this point I hadn't met anybody who had seen this, and I, at least for now, still remain, I don't know anybody else who uses the 50% mark of range. But it is and has become the most vital part of, especially after bear markets, or during bear markets, being able to signal whether we are looking to continue. No, I don't mean use it. You know what I mean? I mean, I'm the only, obviously, person who's created a strategy or centered or focused on that 50% mark. Um, and again, I just didn't have the noise of somebody teaching me anything else for me to miss this. And that's where the 24-hour time frame gave way to being able to spot clear ranges, box them out, and then make that observation. I also was using volume profile at this time anyway, and so as I was zooming in on these boxes, it was like, well, why is the majority, if not all, well, not majority, but the highest volume at the 50% mark? And this was true even for ranges. And so, this is where the strategy began. But this is where I'm able to spot new highs and new lows. Now, disclaimer, yes, I will be the first one to tell you that there are, on rare occasions, areas or places where it hasn't worked for me. And I can tell you where those areas are. Stocks that have low cap, no volume. So when you're offered a new price or you try to displace people, they just laugh in your face because nobody's there to buy, right? And it's pretty easy to average down. I think I remember a trade on what was it, Box or something like that. Maybe it was Box. And it just didn't go well. Yeah, there's the old ruins of my of what I was trying to trade possibly. But this was a stock that just you can't do it. It doesn't work. Now the punchbacks, you'll find it in places where structure clears up, but even it's disgusting, right? Punchback, new highs. Oh shit. Oh damn. You know what I mean? Empty space gets filled, but not in the way that you want. So it is important to remember that we need people there to actually displace. We need people to have their stop losses get hit. And if the stock doesn't have people, then how are we supposed to get that done? Right. So, and I'm not saying that you can't do this, and that some stocks that have volume in and out of them, right, they get these big bursts and then they die off. You'll be able to utilize this strategy, especially during those events. But the only times that it has not worked is when I'm outside of where people give a shit about it. I mean, just that simple. If there's no volume on it, no news, and nobody trades it on a daily basis, and a lot of stocks will go through this, guys. It's typically going to be like right now, semiconductors and tech and, oil. And that's money is gravitating in certain directions, leaving other areas without the volume they need. And most of those are in accumulation, waiting for that money to rotate back in. All right. So make that clear. So the punchback, by definition, is the break of the 50% mark on any time frame, right? From the 1 minute, if we can find a box, if it's on futures right now, right? If we can find a box, then we can find direction, right? And this is where maybe we won't find a box, maybe we will. But all the way down to the 1 minute, you're going to see boxes appear and punchbacks happen. Obviously, I'm utilizing the ones that are on higher time frames because they give me bigger moves. But for anybody who's watching this in the future, this is something that people are able to successfully do on every time frame, hopefully with the higher time frame in mind. All right, now this is where my examples go to higher time frames. So again, my apologies, but this is where we start to see a box, and I will be honest with you, misclassified this one on this time frame because you get lower time frame, you actually get two bounces off the bottom on a lower time frame. So I just moved my boxes up. But this is just a good example of structure building. Price pops up, right? You do get to see it holding its cost basis, which is still important. So whether you're using a range or using a box, right, it's still the 50% that has that volume. Unfortunately, with ranges, and again, if you were just looking on this time frame, you would have to move down a little bit to see that it was a clear box. But with that being said, price pops up, price builds, whatever resistance was in front of you was unable to be reclaimed. And this is where, right, typically you're going to see cost basis getting retested. Prices also falling underneath an area that sellers control. This leads to that punch down. So whether it's up or it's down, right, it's going to be same concept. Impulsive traders, right? This is actually really awesome because in continuation trades, and especially up against psychological numbers, even like 330, what you're going to actually see after extended runs or after a big push is you're going to see them give them a little bit, right? And this is meant to catch you too. It's meant to catch you off guard, but price will pop up, pull down, pop up. This is where I typically chill out, right? I back up and I'm looking for, he said, yes, Potter. Well, it is, right? You see candles ripping up, just like in this example, and people will take it after a break or something like that. And this is where if you can establish, if you can't get it in here, you can't get it right here, then you probably are going to have to wait. And the way that you do this is you look at what is ahead of you, because if there's any level, there's typically going to be, if it's not coming off of a gap up or something like that, there's typically going to be building. And any healthy move up, any healthy move down, there's going to be retesting. And so we build the box, right? We get the sideways candles in range. You see the wicks moving up, trapping traders. They pull it back, retest it. Now, one of the signs here is you can see that price drives down, bounces back up. Price goes back up to retest that floor, folks, and drives down. No cigar. Price goes green. They still can't do it. Price pops up, tries to grab, but again, sellers cannot get. So right after that candle closes, after this big wick down, this was a red candle, hits the floor and immediately reverses. That right there is typically going to be your signal, or possibly even your entry with your stop loss on your floor for continuation to the upside. The cool part about this is, again, you test cost basis before going before going up, right? So we pop up, try to grab at that cost basis, pull back, hit the floor, because again, cost basis is the test. Yeah, impulsive traders. That's funny. But price is going up, and cost basis is the test of, do you have what it takes? That's our strongest resistance. So if you can break this, you can break us. You don't, and that's coming off of this bounce. So what do? This is getting to know how price interacts with one another, or with itself, right? Price moves down, bounces again, and that's where you get that strong reversal and candle close. And you can see how that affects sellers, right? As this is one of the biggest and most straightforward candles that you get, the one that closes over cost basis. What are you doing here? Get out of here. Hold on. All right. Punchback. When price successfully crosses or closes through the 50% area of consolidation, or is closed above or below, giving a signal for new highs or new lows in regards to the box and whatever time frame that you have identified it on. 1 minute box is going to take you to the next 1 minute box. The 24-hour box is going to take you to whatever 24-hour resistance slash box that you have ahead of you. Now, in this example here, right, price obviously even builds, and this is actually a kind of a sweet little deal that we get with this thing. Because, excuse me, price on every time frame, right? Thank you. Who do you think you are, the Pope? No, just kidding. That being said, right, price moves up, and before it does, and this doesn't happen every time, so this is just a sweet little example, but sometimes when you break out, you'll build. And when you build, you typically build a box. And when you build a box outside or off of the top of another structure box that you've created, and you come back, if you break this one, you get this, right? Which, if you're a seller, that gives you an edge because you can actually use this lower time frame box and it's dropped down into the top to actually get into a trade like that, especially if it's coming down. But concept here is obviously we get the break of the 50 close through the 50% mark, empty space underneath you. That is by far the most important aspect of this trade, is there is empty space underneath you, allowing for fluid price action. Now, one aspect of the box I want to point or your attention to is the fact that this box is made up of a big pop, a big drop, 3 equal candles, a big pop, a big drop, 2 candles, a big pop, a build, and a big pop, right? That to me screams exhaustion, which is why I believe that, well, not believe, but why this price ends up moving so fluidly through this, is you're exhausting these buy levels, or rather even creating a whippy box, right? Or a loose area of consolidation. It's not built up of a whole lot of this that you see at the bottom, which typically you get all over the place inside of a range or inside of a box. Now, I talked about this morning too, these death candles or death stroke, right? And that's where I don't think I'm going to be able to find it right now, but actually, yeah, I can point it out right here. So one of the things that is actually going to happen before a punchback, and obviously on this time frame you can see the candles. Oh damn, there can't be that much difference. Are you serious? Is futures closed right now? No, it's not. What the hell? One of the candles that is actually you might be seeing this happen here in just a second. That candle, those candles in particular, those long wicked candles, those are actually sometimes some of the strongest. And this is not a box, but it's those type of candles that actually will trigger or set you up for a potential upside move. And that's where price will build its structure, pop down, right? And then and a lot of the times this will just be one single candle that will pop down and close on the floor. And we'll try to go and look through a few more examples for this, but this might be, especially on lower time frames, one of the most useful candles to look for before a punchback occurs. Is and there's a couple of different even low or box, just straight up lower time frame, or excuse me, higher time frame box examples. And I'll show you guys this as we guide through, right? Even here, flip that upside down. So a lot of the times before the move that you're looking for, right, price will whip down. And this one ends up closing back on a floor, not so much on the floor here, but it is that move that ends up being like again, death stroke, where you end up popping out. And man, I think this even happened today on the Qs on this lower time frame. Do I have like replay set up or something? Is it on the cues? It was right when that news event came out. Oh, I'm inverted, dude. I was tripping out just now. There it is. Good God. There it is, right there. So this five, dude, thank you so much. I'm a human too, guys. I get scared sometimes. Now, this obvious move leads you down, price dips in futures, but this price leads you down where you end up seeing a reversal off of that wick. And so this clinker, this is one of those candles that you can look for before punches up or punches down. Here's another example right here. And you actually end up whipping on both sides. So you get a pop up. This drives price down. So there's an example of it there. This ends up wicking down twice, grabbing hold of the floor. See if we can see any more examples here. There's a little example right here, right? Price pops down, pops back up, closes against the floor. It happens right here, just not a wick for us because we're on the 15-minute time frame. But most of the time before, and this is a good rule of thumb in pre-market, you'll actually be looking for a lot of the times to inverse whatever move happens first. If you gap and go, or you have a gap up or gap down setup, this can still be true momentarily. You'll see a price wick in the opposite direction before driving in the right direction. Again, you have to have a map or a blueprint. Here's another example right here, right? This was a box. And this obviously kind of explodes up before closing and retesting. So, all right. Let's see here. All right. Now to review, and I'm going to use this little slide here to review this setup, or what we're looking for in particular to make sure that we're executing a punchback. Um, the difference between obviously ranges and boxes where we can see clear candle closes, points of contact. That's where those 50% marks in the punchback matter the most. And that's where the most high probability trading setups occur. Anything that looks like a range, you have to treat it as such, as that 50% mark does not promise anything high or low. Um, Actually, that was the wrong slide here. Okay, so this is that tail, right, that I'm talking about. But we have phase one, which is consolidation. Phase two, which is always going to be price dipping down, right? Retesting something directly underneath you before popping back up. And this is this is uh, the epitome, whether it's a long 24-hour move down and then bounce back up, or it's that 1 minute retest of whatever floor you have underneath you before closing back up in the box that you lost. But the goal is, when you're trying to take something to the upside, to look for structure that has been lost and is being reclaimed. A lot of the times, more violent that reclaim is, the quicker that reclaim is, the quicker the dispersion of sellers can occur. Price action is trapped within a defined range, establishing clear boundaries of resistance and resistance boundaries. Tension builds as the market finds equilibrium around the 50% level. A divisive reclaim of the structural floor followed by a violent breach of the 50% cost basis confirms buyer's control. This is a precise mechanical trigger for entries, right? We can place our stop losses typically on the floor or potentially cost basis itself. Now, what sets this off, and the only reason that I'd be looking to take these sort of trades, is because there isn't anything up above me. Now, you're free to do which, again, a lot of people trade a lot of different ways, and they trade through structure, and again, find your space. But with that being said, one of the things that's and pulls volume towards it right? The vacuum, if you will, is empty space, and this is where my options typically compound. They do not compound as much or build as quickly when they're moving through consolidation. Now, weekly contracts can accumulate and lose their value quite quickly, but this is where, especially with anything with any sort of time on it, you don't see that appreciation. Oops, damn toothless. You don't see that appreciation immediately. So it's good to have an entry off the floor, right? On that. So a lot of the times, and I'll be frank with you, uh, a lot of the times those whips, right, set up for or allow you to potentially set stop losses on the floor because you know that sellers are already, especially when it dips pretty violently. And I'm looking, well, that happened in after hours. Let's see, take Tesla. So you can actually see this at the bell. Take a look right here. Tesla sets up its structure, right? Going into the bell. And this is where you really want to pay attention. I'm yapping, okay? But on my screen above me, I'm also looking at how the stock that I'm planning on trading is setting up. And this is going to be a useful tool for all of you who are day trading or looking for entries on higher time frame. It doesn't matter. This can provide or help you with your entries. These boxes, right? And again, we start zooming down and it clears itself up even more. Say even that right there. Look, take a look at this wick. Tap right off that floor. And I believe that's your 928 candle right before the bell. Price dips down, finds its floor, and then you get a violent move back up. This is where price action, again, obviously you need to be ready for this. Stop losses can be set there, here, and absolutely there. How do you get into these things, right? Especially when they happen, so fast. This is why having a pre-market plan is absolutely necessary. You do get a 1 minute candle close directly up against that wick. It quickly, very, very quickly, in a couple of seconds, retests back down before exploding back up. Something like this happens intraday. Okay, so the same things can happen intraday as they do, or at the end of the day. Uh, but obviously, at the bell, if it's something that you're planning on taking, you must have dug into. This is what top-down analysis can look like, especially if you see a good setup in pre-market. You can't just look at the 15-minute, because what is the first 15 minutes of the NQ just did that move up that with that wick that I was talking about? Does I have my chart inverted? No, I don't. No, yeah, it did. Little pop up. For some reason, my chart's being all weird. There it is. Yeah, there it is. Little death candle right there. I don't know why my chart lagged like that. Something stupid. Again, that's the kind of stuff that I saw as I was drawing boxes, and I'm like, wait a second, something ain't right. You could also, at this point, track a channel very clearly, and now you have a potential break into new highs. Wee wee, right there. Futures traders. It's interesting to see this stuff play out. And then again, this is only on the 1 minute. So right here, right, even though you just pulled back really quickly, and this is where typically price will get stuck, right? If you lose this, I would assume you're doom. Yeah, actually right below that wick, right there. I would assume you'd be looking at the downside here. But yeah, we gapped the fuck up, dude. We gapped up. It's gonna be tough though, dude. I believe. Oh, my neck hurts. Stop, toothless, dude. 7:03. What did I say? Why does your 1 minute show 6? I don't know why it was doing that. If I'm being honest with you, dude. I think I'm in the past somehow. Am I in the UTC? Give me 2 seconds, guys. I'm gonna grab a Advil. My head is hurting for some reason. Yeah, no, I'm in the right time zone. I don't know why it's like that though. Maybe I need to refresh it. I don't know. Yeah, no, no thanks. Hold on 1 second. All right. Yeah, that's I have no idea what that is, dude. I've never traded futures, so I don't know what that means. I don't think that's right. Yeah, it is 7 o'clock though. I don't understand what the hell's going on here. It's not my laptop. No, it's the regular time. Anyway, sorry. Well, let's keep watching this while we're in the past, I guess. What the fuck? I don't know what that is actually. I'm gonna be honest with you. I have never seen that before. Yeah, it's just acting all goofy, dude. Delayed data. It's not possible, dude. I have the I have the latest data. All right. Well, anyway, that's cost basis. Regardless, trading view is behind the top step chart. The system is cracking down. Maybe. All right. So again, this, the future stuff is irrelevant right now, but um, this is especially useful again for higher time frame 24-hour wicks, candle closes at the end of the day that reclaim their floors like this is extremely. This is what happens an hour from now. I have no idea, bro, why that's like that. It's kind of bothering me a little bit. Yeah, weird. Anyway, um and especially useful for pre-market prep, right? When you're building your trading plan, that whip down and entry inside of the structure is especially helpful. All right. Now, from here, I'm sure I have a few questions. Let's see. Did I pull that? Okay, there we go. But yeah, if you guys have any questions on anything that I've covered in regards to the punchback in itself, um, this is now your time. And if there's anything you'd like to go over or some examples, I have those as well. Maybe TradingView sucks. I have no idea, dude, why that's like that. I mean, what here? Let me look at Russell. Plus, why is the QQQ not? I should be able to see QQQ. Yeah, I don't see that gap up on the Qs. I don't believe it. Yeah, holy not gap. I don't know what the fuck that is, guys. I that's what I was just. Oh, this is quad witching. Oh, it's got to be have something to do with it. Anyway, hit my adjust button. But nothing's changed. Oh, on NQ? Yeah, I did. I did. It put it back where it was supposed to go. Scared me. Quad witching is the expiration of monthly contracts, and I have the technical definition. One of my slides over here. Yeah, so the quad witching is basically expiration of four different derivatives. It's the stock options, single stock futures, single stock options, and single index futures. It occurs on the third Friday of March, June, September, and December. It's typically associated with high trading volume and volatility occasionally. I'm going to take that with a grain of salt. And now there's the witching hour. It's the last hour of trading, 3 to 4 p.m., known as quadruple witching hour, when all of these are about to expire. So, institutional investors, says here, use this time to rebalance portfolios and roll over positions. So, and that's, you could have Googled that. It's just same thing. It said there's something like the exact pricing on a smoother. Yeah, you'll have delayed data if you don't pay for those. All right. So, anyway, back to what I was saying. Does anybody have any questions on the punchback itself? 50% mark. Here's another little example right here, too, of price exploding down before that right there probably would have been a great entry candle for that move to the upside. So, if everybody's totally caught up with this, right, then that'll probably be the homework for tonight. Identifying punchbacks on higher and lower time frames. A second, I'm just pulling something up. There we go. Stop pulling other slides here. Can I look at UNH? I want a storytelling mode. I feel like the 24-hour has a story to tell. Sure. I think I can already tell you, it's a story of exhaustion. Well, that is definitely, I think it's a weekly wick. Yeah, it is. The result of that wick, perfect, basically perfectly tap this. So we have a well-established, you know, floor. I guess you could look at it there. I'm not exactly sure what you're bouncing off of there. So I'd say, I mean, first of all, uh, we don't, without the final move, right? Because if this thing comes barreling down tomorrow, you know, the story would be obviously different, or we could conclude the story different. But at this point, right, price cannot, cannot build and break. We obviously saw that with multiple gap ups, attempts, tries to break for the third time. So price has lost officially its floor at this point and drops down. Now, I might just be missing where exactly this bounce is at. So let's try and see. I actually am unsure where that bounce level is coming from. Might be something on a lower time for. It looks like the only thing I have here tracking is what appears to possibly, no, well, maybe not old cost basis. Oh, that's exactly off the floor though. So yeah, it was literally an old cost basis through empty space, which I guess when you have nothing but a skeleton, right, of the top and the bottom, that would be most prominent there. So kind of a, and this is again in range, so we can conclude that to in range behavior. That being said, it does appear that price, after hitting a floor and establishing a range and attempting for a damn near what, yeah, this is your third time. Looks like it's there. Price goes down, bounces off that old mark, and then ends up reclimbing. So sellers push off the floor, drive price down, and now we see buyers picking that floor back up. Cost basis has been lost. That high has now been hit, and you are building in between that and the box, which I do believe. Yeah, so if you adjust this to the 4 hour, if this breaks, so this is where I feel very confident, and when I see price hitting the exact same mark, that's where I feel really confident that that is where that leads to this. And obviously, we know that this would likely lead to the upside. Now, this is where you start also looking for the whole story, right? Putting the pieces together. And I, you know, again, am thriving off of points of contact, and that's my points of contact, right? Now, extending this, I think at this point is optional until we see a breakdown in that direction. But this is the current control, if you will, right? And it does look like it is set up to potentially expand. But I would also put it, you know, I wouldn't put it past this thing to possibly be exhausted, right? This channel itself. So with that being said, I think the story is, you know, again, turning the tide towards where seller or buyers can take over control. But the result of the next 2 days of trading is really where I think this finalizes, right? And I'm gonna be honest with you with the channel that this is just useful for now to know that you are. So let me tell you the most important things I'm pulling out of this channel: that you're in an uptrend. That's it. That's probably the if anything the most important. And I'm gonna just explore with the notion of this possibly looking a little bit different. know about that one. Feels forced. So anyway, focusing on horizontal, it's 287.50 to the upside. Trigger to 291.23, and I think at this point with this third, you have it. It's a weak uptrend. It feels like. So remember what I talked about with the volume being overhead. If the volume can't break, then sellers are in control. And yes, there's not a lot for you. There's not a lot of footing for you to grab off or grab onto. Right? You're using old cost basis to bounce. And exhausting yourself while doing it. It doesn't mean the end result can't end in their favor, but it would likely be a catalyst that drives this through that volume. Since the 24-hour box is hard to break without a catalyst, does that mean the default bias is to expect a rejection bounce and that trading breakout would be a speculative play? Uh, it's you said without I mean the catalyst can literally just be the markets moving. You know what I mean? Like the catalyst can just be overall market, bullishness or bearishness. So it doesn't have to be like some groundbreaking news that the company achieves. That could be helpful, but I mean, it could be short volume, it could be retail attention, could be that catalyst. Um, so I would say again, and you said with the default bias is to expect a rejection and bounce, and that trading the breakout would be a speculative play. No, because some things just so here's also Mamma Mia, we're also looking for money to rotate into that sector oftentimes. Um that's important, right? If there's no money in that area, or and that oftentimes can be the catalyst as well, is money rotating back into whatever sector that you're watching, whether it be semiconductors or oil or you know um, consumer goods. That a lot of the times is going to be enough of a catalyst to get going, and if that's true, then a candle close outside of your range in a again trending market, both, and that's one thing that we're missing right now, that I think some people are getting frustrated with, is the fact that we're looking, we're in a struggle to establish trend, whether you're looking, and I think that probably IWM RTY has a greater possible establishment of that trend for sure. The SPY, right? This one's struggling to fully establish it, right? Qs definitely have not started, right, fully that trend. So it's, I think, important to remember that at least right now in these conditions, right, it's almost, and most of the time when the Qs bounce back, they move back pretty heavy, but it's almost like this. We're here in this buying area, right, on the floor inside of this massive box, right? And this is you now. I flip that upside down on its head, right? Slightly bigger box. And we're going to bring that up right here, because this is actually the target down. So we're in that area where we're trying to, and I would say this applies more to IWM and SPY, but we're trying to get that breakdown. This, what I was just showing you on that example, is probably more true here, right? Where we've just broken out, we've just retested, and we're trying to see that continuation of the downside. But I mean, it is kind of fun to look back and see just how long it takes for something to start moving and getting sometimes it's months. But it takes, man, that was one hell of a beautiful punchback right there. Yeah, where was it? Here. Yeah, I mean, look at this. This is, weaker plus. This right here is a weak plus. Then you finally establish where you're going. And you have empty space up there to kind of help, gauge that there's still continuation. And that's missing right now from most of the daily trading. A lot of the daily trading stocks. I mean, I can't tell you how, I don't want to say nerve wracking. It is a little bit nerve wracking to be shorting this giant pile of electric crap. Because it's man, it's like wrestling an electric eel in a swamp. It just the edges until we get it out of the water, right? That's what I'm looking for. I need it out of the water. Once we're out of the water, I got the net out. Eel's mine. Would this be a good example of a punchback? Yeah. This was, yeah, I mean, yeah, that was a good build underneath the box. It does look like you gap up to a wick and then you pulled back and then kind of explode. Whoa, that was right before news. So you broke out, retested the structure that you broke out from, and then popped out. So why not cat water? I just don't even want to tread on that ground. Punchback is down. Punchback is down. Yeah. If you ever hear me miss say that, yeah, a punchback, right, or punch up. I call it all a punch. The Potter box punch back. So it's like you're going back to whatever you lost, right? So punchback is technically relevant for both, but in this the box is the back. Yeah, that's it. The box is the back. You're punching back into it. Yeah, it's just you're just whatever punch. When I'm being specific, I'll say a punch down or a punch up, just so that you know that that's what I'm talking about. Like this is a clearly a loss of the floor. Candle taps it, candle closes on it, and you see continuation through the box. And this, oh my god, this was the worst. I remember this shit. See, when something's trending, right? When Tesla has like continuation or trend, that's where things move and charts start, as you start seeing punchbacks move the way they ought to, candle closes below the floor, mean continuation to the downside, right? You get candle closes obviously breaking the floor even intraday. Uh Candle close below the floor, same deal. In a trending market you're gonna see that, and that's one thing that I mean, here, even if you're looking at this, right, you break out and you might think, oh no, it's all over. You look at, oh man, and that's what, again, what we're missing is when we're trending, every time, like in a bear market, every time you pop up and you see that fast move to the upside, you can start looking at taking it down, and you know that that's the direction that we're moving. Right now the sense is that nobody knows where the market is going to go, right? Because we are literally inside of this insane range. And while small caps have gotten their ass beat, here and there, and IWM represents that, there's obviously still more to go. So, and that's where I think trend hasn't really taken over the way that it usually does. And, people are gonna. This is one hell of a market to start learning in. I can tell you that much. There's going to be a lot of money to be made when the move is done. But the one thing that I know is going to be tough, and I don't think it's tough in a way that it can't be accomplished. I know that it can. Is flipping your head upside down and looking at things the other way. Did you hedge Tesla again? I traded Tesla. I did hedge because of where it landed on Tesla, but I actually traded Tesla up today. Um, I I I felt like this was gonna be a rewind of the last time. So obviously, when I shorted it here, popped out, punched up because we left behind this stupid pocket of empty space with the box up above right here. And same thing yesterday, right? We dumped really, really, or last week we dumped really, really hard. And actually, I mean, actually, if you guys go back in the class, did we? I think we talked about this, right? We literally talked about this exact same setup, about this, right? And the cool thing is, right, is that you open up on this lower time frame cost basis, which just immediately gives you that push you need to open the bell, shoot out, blow through this box, fill the empty space. You graze the wick, and then price into retesting right off of that 399, trying, failing, and then dropping down. And you can see they're like really wrangling it at cost basis. Like that's where things get heated. I'm still in this one. I look at this one, and while it isn't technically, again, a punchback, and I want everybody to know that. So the result, whenever I go outside of my strategy, right, and usually if I'm taking a play, there's some aspects that are, if I'm in something that has none of the aspects of my strategy in it, I've lost my mind. Um, but for something like this, it's got the empty space, it's got the clear targets, it's got the equal floors underneath us, and then right now in perfect harmony with all of this, it's in a box. I'm out till April on Tesla. Yeah. Um, yeah, I've got a April 17th and April 10th. Any more, because I'm down right now. I've luckily I'm only down like $470 on that position, or excuse me, yeah, $470 on that position. um but for the April 10th, I'm down 610 on the 17th. But um that's what today's trade to the upside was intended to do. um Sorry, my wife walked in a nice outfit. Kind of took me by surprise. God dang. Um, dropped our stuff for her. She's. I've been trading for her boyfriend for his account. They might be going out on a date. I was just kidding. Sorry. Um, your wife's boyfriend. Yeah, he's been spending all the tendies, man. All right. Let's see. Did I finish what are any questions here? Punch down. Let me see. What do you got here, boss? Yeah, post your questions. It's an old trading joke that people from Wall Street bets used to say. They used to be like um my wife's boyfriend, because obviously their wife has like left them because they're just yeah. Yeah. Was this a punch down? I don't think so. I'll have to look at that one myself. That's the hourly on TSM. Okay. I mean, this is really interesting. Some pretty sweet price action. Very mechanical. Very mechanical. God dog. Oh, looks like might have an upside play on that one. Ah, I see. Is that a punch down? On the 2 hour, for sure. Absolutely. That is for sure a punch down. What's up, PD? Hold on 1 second. Sorry, I'm trying to fix some permissions really quickly. All right. So let's finish this up. Let you guys go. So what I want you guys to do tonight, just go ahead and establish homework. I want you guys to find me on anything above the hourly time frame. Okay, so it could be 24-hour, it could be 4-hour, it could be hourly. If you need to use multiple time frames, all right, listen closely. I want a punch up on one chart and I want a punch down and see if you can find both. There's no specific list of stocks. Have at just to throw that out there. I'll repeat it. So, all right. Now, can I chart gold? Do you want gold futures or just gold? Lao. I'm going to chart gold futures then. Looks like that trend line's coming in play right here. But let's get rid of everything and focus on what we got ahead of us. All right, so clearly you had a box here, and that did experience a punch down. Right, same high over here. Cost basis fights, pop down to the floor. You bounce a little bit, but now, as of right now, you're building in this box here, and this is below you. One thing you guys got to try to really practice is make sure you're focused. Yeah, I can chart whatever you guys want. We'll be going through, I'm looking for examples. So if you guys want to drop charts for something that you're looking for, I'm going to show you where those punch backs and punch ups are going to happen, or what we're looking at. Look at that. Isn't that so interesting? You drop down, and then cost basis becomes that overhead resistance. It's pretty cool. I would say right now, man, I for gold, I really see like I see an upside move over 50-40 to go and tap that floor. Now, in the most recent price action, right, this kind of gets a little bit clear. I would say the 30 minutes probably your cleanest time frame. Here, floor, seal it right there. Bam, perfect, right off a cost basis. And so yeah, actually, this fucking looks pretty good, actually. Damn, look at gold, man. Gold's pretty fire. I'll be honest with you. So, you got a candle close outside of 50-40, a punch over at 50-50, target at 50-75, and all that empty space in there should make life a little bit easier. I'd be looking up at like 51. I think Ruben would agree, probably. All right, let's look at DE, see if we can spot any punches up or punches down or confluences in this example. All right, so first off, starting with the weekly. All right, so again, there's really virtually nothing you can draw from this chart other than, right, what's underneath you. There's nothing up above, and I don't have a system for any sort of, there is obviously weekly up above, but you just have a rejection. I do not see any floors here that does, so sometimes, right, something like that, where you get a wick and a body, that can be, see, there it is. So often, that's what zooming in is for. Now, I also see the same thing here, right? And I'm going to assume there's structure down right here, somewhere around 567. So let's go, there it is. I would be correct on that. And I would assume safely as well that this is your top, which is what you just plunged. So candle close. Let's see here. Let's go. Yeah, you would be actually pushing down into this box right now. So I would say right now, hold on. Nope. Ooh, that's tough. So I'm actually going to do this. All right. I'm going to pull this box down with these 3 points of contact and candle close. I have to give it that. That wins. So you are successfully planted yourself directly at the top of that box with a cost basis target of 566.86. And of course, that would be your higher or lower time frame trigger, right, for DE to keep falling, which is obviously a tall order now at this point. But you also, right, have a wide fluctuation in price. So something tells me that we might be missing something here. So I'm going to see if I can't find it. And here's how I'm going to do this. All right, check this out. I'm looking for points of contact. And it may not work, but at least help me get on the right track. Okay, we're definitely on to something here. Okay. Now maybe we don't have a box here. We have 3 off the top. Maybe I need to take a second look at this box. Let's look at the 1 hour. No, you definitely I got my points of contact correct. That little candle there is a little odd, but so I would say that your next feasible area to possibly even bounce would be cost basis, right? And you might end up doing something like this to kind of kill time before sinking down and maybe getting the imbalance in this small pocket of empty space, 553. But I would also, and again, that's continuation. I would also be looking directly up above you because it does seem that you have, I don't know, I feel like you're probably going to bounce off of this. You did respond pretty well. So we're all the way down on the 1 hour now, folks. Right, so if I can't figure out what's in front of me, I'll tell a story. Got a small range there. You gapped up, popped off of it, touched the floor up above you. So now I know where the floor is. And then you get basically punch down through that small range. Now, so I could say this first. Candles beautifully reclaiming that level across the board will get deer moving in the opposite direction. This is where the chart gets a little bit finicky. This is that's pretty crisp. This is hard charting, guys. It's not easy. I'm over here flexing my brain right now. So again, not really distinguishable, right? I can't find points of contact, so I'm going to be forcing it, so I can't do it. And this is where if I can't find it here, see, 30-minute. I don't waste time. Time is money. All right, we're going to leave it like that, right? So basically a punch down of sorts, retest, and then now we have a little bit more clarity here. Perfect, right? Bam. So for the upside, we need A, 578.35, B, 583.63, and then I think at that point you could start moving, right, and looking at targets overhead. That you got to envision a giant green candle moving like this is probably going to spur movement back up into areas like 613. So you might be in limbo here in the next coming days, but it's interesting. Micro gold futures. Oh, gotcha. All right. You said meta punch up. Oh, I can't. Wait, where? Make sure you circle. Make it easy so I can identify what you're talking about here. I have no idea if you're doing it for homework. However, there is no available punch up for meta. Why is there no punch up for meta, guys? Why can't that punch up? I don't know. I still see this short. It's punching down. It popped up, right? And I've looked at this a couple times. The floor is right here, right? Or rather, the bounce level is right here, but the candle closes are all off of this 637 floor. Price gaps down in the wicks, right? Pops up, closes next day, pops off that floor, and then makes its new high. Price moves down, right? Dips into a new low. That's the punch down, if you wanted to call it that. Pops up, and this is actually where we were looking at taking this because it rejected that overhead high. So this box is well established as still a strong point of contention, a strong point that can be utilized for both calls and puts. The floor, I mean, God, this is perfect, right? This is a class A example, right, of price interacting with his floor on the 24-hour and what's up above. Now, this is where you would have to focus, folks. Don't get lost in this noise. Focus here, right? Your play on meta would be mostly focused on, I believe. Okay, so that's its own little range right there. Still a little ugly, but it is there. Not sure if I want to give it that whole. You know what? That actually does work. Okay, sorry, little brain fart there. So you have this very small range. So this would be your trade, right, on meta. First of all, it'd be really nice to find a floor. A gap down could help you secure that. This is the only feasible floor that we have in front of us. And these are all, again, executable trades that I'm setting up. So, feel free to use them. Even if you're just paper trading them or light risk trading them to learn. There's a floor here. So I would say right now, right, there's a you would need step one would actually, hold on one second. This needs a lot of adjustments. Sorry. I need 628 A. I need 630 B, right? And this is just getting the trade started. And then obviously a candle outside or moving in this area, we'd be looking up. Now, the higher time frame has empty space in just a small 639 area. I wouldn't expect the most fluid movement in the world here, but I would be assuming, oh, you know what? That's going to be a hell of a strong level right here to go and break. So yeah, you absolutely have 648 in your sights. You get this, just like you did there, you'll get that. And this actually seems to be the same result over this, there. Damn, look at this. There, there. I think that's the end of the examples. But in the most recent price action, that's been it. All right. What else do we got here? INTC action, end of day. Lord have mercy. Now, me and INTC have a long pass together. It's not good. 4 hours clearest. Damn, that's crispy, actually. Crispy-ish. Here's a good example of that little Deathstroke tail right there. That right there, that candle, delicious. Now, obviously, I wouldn't have traded this even if my life depended on it. And this is your current range. So you could say this is why it's so damn choppy. It's got its box all merged together below 45. You'd have an instant potential tap of 44.30. You'd want to blow through that level, and that's where you could look for INTC down. There is reason to believe possibly that there could be a INTC play down. There is very clean channel work here, and that obviously gets dragged up. Yeah, yeah. All right. Okay. So another really tough one, right? It's a good one because when it gets going, 3 day bars. This thing, got to be on the. That's actually, oh, fire rip right into empty space. You stop right when you hit the first green candle to your left. Ridiculous. All right, so first off, right, I'm gonna again kind of backtrack where we've been. And it looks like that's where we've been. That's what we punched down through. All right, what did we hit? Looks like the low is there. However, the floor is here. So, and we really don't have much else other than the box or range that we're trading in currently. So one could say simply looking at the 24-hour time frame that outside of 128, right, 78, there's an upside trade. Now, I do think this could get sweeter because there is empty space down below where you would have a target of 131. That would be kind of set up in an entirely different way. By the end of the day, you would want to be punching or over 127.50 and a move over 128.73. And I think that would give you a wonderful target to the upside there. I can't do that. I can't do this though. Walmart's tough. Ford tough. Hmm. I think that's the channel could probably get cast away until we get some more points of contact, but that's not bad. Downside doesn't really help too much. No, you got it. So downside would be anything under 122.75. Not the cleanest, but there's potential there. You filled up a decent bit of empty space, say for the 119.50. So, all right. Any other questions on the punch back? Any other questions on any charts? Or I send you guys away with your homework. RL? The hell's that? Ralph Lauren? Lord have mercy. I haven't done analysis on this one for a long time. See, with SPX, man, I just chart SPY, but I'll look at it. That's basically SPY's daily. You don't get any after hours data, but I'll look at it. So this one's going to have me probably in the same situation perhaps that you are, but it does look like there's some, you know, feasible price action. It's tough, man. This is where, obviously I lose a little interest in the actual trade that it's trying to offer me because the price action on this one is just dog water. Yeah, it's not a good mover anymore. I mean, it does move here and there, but as far as like setups are concerned, you did have a great setup over here, right? Old slow ass punchback. But now, I mean, this right here, dude, is yeah, cat water, hamster water. I'd say ferret water. That's pretty stinky. If you ever had a ferret, yes, I know my name rhymes with it. All right. Yeah, I'll just go over this slide for just because. So this AI helped me put this one together, but I liked it. So the example that it gave wasn't really my favorite, but this is really good to kind of remember how um, or what you're looking for. Um, the yeah, there you go. So this is the Illuminati time frame hierarchy. Uh, so again, before I send you off to do your homework here, we have, or I'm wanting, you guys may be doing top down analysis, but you know, anything above the 1 hour, right? So if you're doing analysis, it would be still helpful to start with top down. But when you're starting your day, when you're looking on Sunday, when you're doing study group, this is the way that you're going to be going, right? Weekly time frame, the macro trend, massive multi-month setups dictates the overarching trend and extreme long-term targets. Weekly boxes trump all other signals, right? So you might have like a, you know, gross setup on the 4 hour, but on the weekly, if you're in the middle of a punchback, it's going up. 24-hour time frame. This is again the gold standard where the vast majority of trades live, right? Or where we look for our trades to not necessarily trading it live, but we are looking for trades for the lower time frames, daily time or regular trading hours, day trade, scalping. This is the time frame that we identify those pockets typically. Um, Precise empty space identification and reliable swing trade confirmations happen on this time frame. And the 4 to the 1 hour time frame is the execution layer. This is where we find out, like I've shown you in a couple of examples here, how we are breaking our charts down, how we're getting into that trade, where is what is above, what is below, where have you gapped up above, where have you gapped down below. All of these things matter. So make sure that you're utilizing them and doing that your charts this way, because, and this even, so again, the perfect world would be the night before you spot a good setup, right? Or obviously the night before your trading day, you spot a good setup. You like it. You look at the weekly, you look at the 24-hour, you like it. So then you go to the 4 hour, the 1 hour, you like it. Everything lines up, everything's crispy, everything's clean. You're able to spot contracts the morning of you're building that lower time frame setup, right? And you can do it the night before if you'd like. Make sure your chart's clean down on those lower time frames. And then once you're done doing those lower time frame analysis, correlate them, right? Split your charts in half. So that way you can look at both sides, right, of that trade. So whenever you're looking down on this, say I'm in Tesla. So for Tesla's example here, right, I can corroborate the levels that I see right here. That's that empty space, right? I can see the gap. I can see the candle closing here. I obviously know that this is one of the most important time frames, but I also know that there's some lower time frame trades or setups that would have to be broken in order for us to get there. Right, that one's going to be more or less 388.72, and I can see that greater detail by moving down. And again, all of this to get the red candle below that floor. All right. Now, with that, I'm going to go ahead and send you guys off with your homework. It's 7:56. I swear to God. Okay, I am recording this. I thought for a second I forgot to record. Whoopsie, that would have been terrible. Does anybody have any last questions for me? Punchbacks, punch ups. Oh, let me look at SPX for you really quick. Sorry. Actually, pull that back up. Time frame for anything above the hourly. So if you pick one stock, I'd prefer to just pick one and then give me a multiple time frames, right? Show me, or if you do pick more than one, give me like two different time frames where you just see a punch up and a punch down. That's what I want to see: a punch up and a punch down. Two separate stocks. If you find them on the same stock, knock yourself out. Okay, so SPX does have that. Oh my God, SPX has a gap up. So if we're so this, oof, damn, fuck. That's going to be and that has been a nasty bounce level. There's some money to be made on this SPX here. I can tell you that much. Money to be made. 66.81 downside. Gap fill here. not gap fill, excuse me, but yeah, damn, look at that. Oh my God. So that would be down. And here's the deal: if you go down first, right, and so even if you secure, honestly, you might not be able to, but if you wick down, pull yourself back up, oh boy, you're going back the other way around, and vice versa. If you bounce here, pop back up, fill your gap, I would assume back down. Sweet. All right, folks. Y'all have a wonderful night. I will see you guys tomorrow morning. Bring your homework, and we're hopefully going to finish this out. So if you guys have any questions as you're going through this, make sure to write them down. Tomorrow's going to be an important day to get them out. Okay, so watch them back. Do what you got to do. Before you leave, up or down. For you,